What is up? I just had a video I wanted to go over and talk about for the future and what I'm going to be doing with my trading. Currently on a losing streak, and if you can't tell, but I'm not really worried about it, literally at all. I do not care. And I'm going to go why I'm having this mindset going into it and what I'm going to do to go about this. I'm going to give some sauce, so be ready. So going into it, I'm going to go into some psychology from Mark Douglas, the man himself. If you don't know who Mark Douglas is, this is Mark Douglas. Is the author of the Disciplined Trader Developing Winning Attitudes, published in the 1990 and considered an industry classic and one of the first books to introduce the investment industry of the concept of trading psychology. He made Disciplined Trader, Trading in the Zone. Trading in the Zone is a book that argues consistent trading success comes from mastering to a mindset, not just market analysis. He teaches traders to overcome mental habits that lead to losses by focusing on discipline, confidence, and a winning attitude. The book emphasizes thinking in probabilities, accepting risk, and acting without hesitation to achieve the state of the zone. So here are some key concepts from the book. Mindset over analysis. The core message is that the trader's psychological state is the key to consistent profitability, more so than technical or fundamental analysis. Thinking in probabilities. The book teaches traders to understand and accept that the market is governed by probabilities, not certainties. Overcoming mental habits. Douglas helps traders identify and overcome ingrained mental habits that cause them to lose money, such as fear and inconsistency. One of the reasons I lost today was I exited out of a trade because I had a fear state of mind. And a trade would have ran for 15 to 16 RR, and I would be up big on my account. Achieving the zone. The goal is to reach a state of calm, disciplined, and fearless trading by developing a winner's mindset. And 7 principles for success. This book outlines 7 principles for consistent trading, including knowing your edge, defining and accepting risk, and acting without hesitation, and following rules without expectation. We can go into Disciplined Trader. I've not read this. It's a foundational book on trading psychology and explains how a trader's mindset, not just their strategy, determines success. It argues that emotional barriers like fear and greed are primary reasons traders fail and provide a step-by-step approach by developing the mental discipline needed for consistent profitability. The book emphasizes that true trading success comes from managing one's own behavior and beliefs, and not just from trying to predict the market. So key concepts. The market isn't chaotic. The traders, Douglas argues, that the chaos traders experience is not in the market itself, but in their own heads. Emotional barriers. The book identifies common psychological traps like fear, denial, and revenge that prevent traders from making rational decisions. Mindset over strategy. It posits that a trader with a strong psychological foundation can be profitable even with a mediocre system, while a trader with a great system will fail without psychological control. Developing discipline. The book provides a framework for developing a winning attitude by examining limiting beliefs and learning to respond to the market's opportunities consistently. Practical application. It stresses the importance of a step-by-step approach to mental upgrade, including questioning every trade and analyzing motivations to build a consistent trading philosophy. Who should read it? Traders of all levels. The book is applicable to new traders, experienced traders, and even institutional traders who want to improve their consistency and break through profit ceilings. Anyone interested in trading psychology. It is a valuable resource for anyone looking to understand the psychological factors that influence financial markets and trading decisions. So what I wanted to go into today was basically, if you watch my recap from 10/15/25, which is still today, it's 10:30 at night. I wanted to go into, I gave ChatGPT a prompt basically, trying to get it to give me advice as if it were Mark Douglas, going through all his YouTube seminars. I had it study him, examine him, and then even go through his books. So we're going to go into this. This is really important for the future, and I'm going to even have to write some of this shit down, actually. So I'm going to get some of this out. Damn, that's annoying. Alright, because I'm going to have to be doing a little bit while we're reading through, so it's not just in my ChatGPT. Alright. So, Mark Douglas' core philosophy, the mental model. If Mark Douglas were talking to you right now, he'd say, your goal as a trader is to reach a state of objectivity, a state where you can perceive what the market is doing without the distortion of fear, euphoria, or the need to be right. That means you are not trying to predict, you are not trying to avoid pain, you are not trying to be perfect, you are only trying to execute your edge over a series of trades. He'd remind you, you don't need to know what's going to happen next to make money, and that's a big part. Nobody knows what is going to happen next to make in the market. The market is completely random, and it is every moment, even though it looks the same, every moment is unique in its own way. So he'd remind you don't need to know what's going to happen next to make money. The only thing you need is an edge, something that gives you a higher probability of one outcome over another, um, over a series of trades. So my S&T setup that I've been taking the last 2 weeks that has not been doing too good for me. Your S&T setup is that edge. The outcome of any one trade, win or loss, means nothing. It's just one event in a series of 100, and that's why I didn't worry. I shouldn't have worried about these last 2 weeks of taking losses on SMT, because my one trade today, if I would have stuck to it, which is the worst part about it, is because I got out on a winner. If I would have stuck to that trade and my trading rules, my plan, I would have eliminated all those losses, and I'd be up almost $1,000 on the day. So that was my issue. Thinking in probability is your biggest shift. Mark would hammer this point again and again. Anything can happen. You don't know which trade will be a winner or a loser. You just know that over time, if you follow your edge, your trading plan, your trading methodology, the probabilities will play out in your favor. You're emotionally attached to one trade because you're still operating with a discrete mindset, not a probabilistic one. In a discrete mindset, you believe your analysis should produce a specific outcome. So when it doesn't, you feel betrayed, frustrated, or regretful. You tie your self-worth to outcomes instead of execution. Now, I definitely have found myself doing this, and I feel like most traders who are starting out or even have been doing it for years, they find themselves doing this. They tie their self-worth to outcomes instead of execution, so when it doesn't, and then when their trades don't play out, they feel betrayed, frustrated, or regretful. Why did market do this? Why didn't it fucking work? And then you start not trusting your setup, and that goes down a huge roll. But in a probabilistic mindset, we talked about the discrete mindset, right? Right around here. Does it not show my mouse? It doesn't. In a probabilistic mindset, you see each trade as just one of many that will express your edge. You stop trying to control outcomes and start controlling behavior. You grade yourself on how well you executed, not how much you made. He'd tell you the only thing you can control is yourself. You can't control what the market will do next. And today I listened to my friend who is profitable, made $4,500 today. But he gave me his own intuition, and this is why this is an issue. Mark would say you fell into one of the classic traps, adopting someone else's belief system. He'd remind you, you can't trade someone else's belief in the market. Your friend has internalized his edge and emotional framework. His intuition is built from thousands of repetitions of following his own rules. When you follow his intuition, you're trading with zero confidence because it's not your belief system, it's borrowed. Mark would tell you that's why you exited early. Your confidence wasn't grounded in your own framework. You were reacting to fear, in that fear state of mind, fear of taking a loss. Otherwise, why would I exit that trade if I already got in it unless I was afraid of taking a loss? You were reacting to fear and uncertainty, not acting from belief. He'd probably say, you didn't lose money because you made the wrong choice. You lost opportunity because you didn't trust yourself, which was true. That was very true. So trusting your edge in yourself. This is where your turning point lies. Mark would have you build confidence through consistency, not feelings. He'd say every time you follow your rules, you're reinforcing a belief in yourself. Every time you don't, you're reinforcing a belief that you can't trust yourself. So even if your setup loses, if you executed perfectly on your plan, that's a positive trade. If you deviated, like today I did, even if it worked or would have worked, that's a negative trade. You were conditioning your subconscious either toward discipline or toward randomness. Each action matters. So then we can go into mindset practices Mark Douglas would have you do, and this is what I'm going to be doing. Here are the actual practical drills he talked about in seminars and training the zone to rewire your thinking. Exercise 1, the anything can happen meditation. And I'm going to be writing this down after this video. Anything can happen. I don't need to know what will happen next to make money. My edge will play out over time. My job is to execute flawlessly. It sounds cliche, but this reprograms your brain over time to detach from the outcome. And when you get in the market, what I'm going to do tomorrow is go through that same sentence and just repeating until it's all I fucking think about. And I just am paying attention to my edge. And if my edge isn't showing up, I'm sitting on my fucking hands. Diamond hands. If my edge shows up, I'm in that trade and I'm sitting on my fucking hands. But series of 20 challenge too. This is the next part. Take 20 trades that meet your plan criteria. No more, no less. Rules. Execute your edge exactly as defined. Record your emotions and reasons before, during, and after. And I'm going to do that through the live trading sessions. And after 20 trades, evaluate your performance. Not results, but consistency. This trains your subconscious to see trading as a game of probability, not one-off outcomes. Exercise 3, the post-trade report card. After each trade, grade yourself A to F on 3 things. Did I follow my plan perfectly? Did I manage risks exactly as planned? And did I exit based on rules, not emotions? If you score an A across the board, it's a perfect trade, even if it lost. Exercise 4, what's my edge? Reaffirmation. Every day, write down physically, not digitally. My edge, and I already have this written down, is, let's say, 15-minute SMT and 5-minute break of structure, or 5-minute SMT, 1-minute break of structure, or liquidity sweep on higher time frames, mid time frame break of structure, or inverse fair value gap, retrace into a mid time frame fair value gap, order block, or equilibrium. Not equilibrium on its own, but it needs to be a fair value gap or an order block, and then a break of structure on the smallest time frame, which is either 1 or 5 minute, right? Depending what fair value gap or order block we're playing out of. 1-minute break of structure, take the fucking trade. It has a probability, that's my reversal setup. Continuation, I already know. My edge is insert SMT setup details. It has a probability advantage over a series of trades. Just saying that. This has a probability advantage over a series of trades. My job is to execute that edge, nothing else. This grounds your identity as a probability-based trader. I'm missing the 15-hour trade today. He wouldn't care that you missed the trade. He'd care that you violated your edge because of your emotional interference. He'd say, missing a winner because you didn't follow your plan is just feedback from the market that you were not yet in the zone. This isn't punishment, it's training data. The pain is information, showing you exactly where your internal belief structure needs work. You're learning the hardest lesson every trader learns. You can't skip to intuition. Intuition, this is the biggest part. You can't skip to intuition. That's a process you can get to over time. You can't skip to intuition. Intuition is the reward for mastering mechanical execution. The only way you can become an intuitive trader like TJR, like all these other traders like PB Blake, PB Pat, like we can talk about Justin Werland. I can go on and on and on for these people you see online. And people who actually aren't scamming, right? TJR, even Justin Werland, I don't remember if I said. They followed their plan so much. The only way, you know what you have to do. You know what you have to do to become profitable. Is just know your edge and just get a strict plan and stick to it. Stick to it, stick to it, stick to it. And just don't fucking take anything else and trust your plan. Have trust in yourself and in your plan. And if you do that over a series of times, then through market experience, it becomes second nature where you can add intuition into that. And that's when everything starts flowing and you're really trading in the zone. So you can't skip to intuition. Intuition is a reward for mastering mechanical execution. Building toward trading the zone. Trading the zone isn't a metaphor, it's a literal mental state. It's when you've accepted uncertainty, you've detached from outcomes, you've conditioned yourself to execute without hesitation or fear. To reach that state, you need to define your edge clearly. I have done that. Practice executing it perfectly, no matter what. Release your attachment to the outcome of any single trade. Journal your beliefs and emotions daily to spot patterns, which I'll do through the live session, and rewire them through consistent, positive execution. So my next step is, if Mark Douglas were coaching you, he'd end this conversation saying, stop judging yourself for missing trades. Start judging yourself for how well you follow your rules. Your only job now is to execute your edge flawlessly, one trade at a time. Once you've proven you can do that over a series of trades, right, then intuition will come naturally over time. He'll also remind you, you're not trying to eliminate losses. Losses are going to happen. You can't hide from them, and because that's what people are trying to be certain that their trade's going to be a winner. This market is random as fuck, and it's unique. It's full of uncertainty. You're not going to get your certain answer result. You just have to be comfortable with the probability and think in that mindset where you don't care if this one's a loser, and you don't care if it's a winner. You have no idea until you put the trade on. So you're not trying to eliminate losses. You're trying to eliminate behavioral errors. The money follows when the behavior stabilizes. So the biggest part of this too is Mark Douglas went on a graph. He pulled up a graph and you think of it like this. You have your graph that starts like this, boom, 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 going higher, right? That's how your trading should look. You got up, you go down, you go up, you go down. Small moves, right? And you have traders who go like this, boom, 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 boom. And obviously you don't want that because you're getting these big moves up, but then you're getting huge moves down. And what Mark Douglas came to find out is those traders that are going like boom, 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 boom. Half of those losses where they have these big losses and drop-offs is not from what the market is doing to them. It's because of behavior. It's because of trading psychological issues. and not thinking in probabilities, but having FOMO, exiting out on winners. So it's like today I missed out on a great opportunity to give me a big move up, and then all my small moves down, like go big move up, and then boom, 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 big move up, boom, 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 boom. But instead I'm getting big move up, big move down, and then instead of getting my big move, not big move down. Fuck, I just fucked that up. Never mind, never mind. Either way, these big move downs usually come from people's psychological errors and not actually from what the market is doing to them. So if you can fix these psychological errors, like I said, anybody with an edge in the market can make money. It's just sticking to a plan and trusting it. Now, obviously, the more confluence you have, like 4 or 5 confluences on good time frames, right? The time frames are aligned. So if you have a setup that aligns through off all the time frames and you know your execution and you execute flawlessly on it over a specific period of time, ideally, you could have 10 straight losses. We're not worried about those 10 straight losses if you follow your plan because we're thinking of, well, we had 10 straight losses. Let's see what it is after 100 trades because maybe you go on like a 10 straight winning streak and then you're up big because your risk reward is outweighing your losses. Like on your losses, you're losing 1R, but on your wins, you're hitting like a 3 or 4 RR, right? So you're up. And then maybe you lose 2, and then maybe you win 5, right? It's trusting your plan. You can't put a time limit on money in this because then money becomes the main focus, and you can obviously love the money. I mean, that's why we most of us get into this. But you need to focus on the fact that you need to fall in love with the process, and the process of just following your plan every day and improving on that. Maybe I make a mistake and okay, I'm gonna journal that, write it down. I'm gonna make sure I try not to make it tomorrow, and then make it less frequently over time. And through that process, you will get better in your win rate, not your risk reward. Your risk reward for me is probably gonna stay the same, but my win rate can slowly get better and better and better. And I slowly become an intuitive trader with the more reps I put in, with discipline and consistency on my trading plan. But yeah, that's really the whole idea of this video and what I wanted to go into. Um, as y'all can see today, that trade ran. That was a trade today. You'll see in the setup. Yeah, that thing ran. But overall, we can move on. I'm going to get rid of some of the stuff, and while I'm getting rid of it, we can talk a little. Oh, by the way, actually something I didn't even think about that I'm going to be doing tomorrow. I bought another funded account, Express account, and I'm going to trade that for the next 2 weeks. So I have the Express account, right? Balance. You can see the balance right now. It's not looking good. And then I have the fresh account, Combine. Nothing on it. I'm going to trade that for 2 weeks. Top step had a deal, so I'm snagging the shit. Got to get another 100K Express account. So ideally, reflecting your previous trades beyond whether they were profitable or not, or losing trade can still be a great trade in the same way that profit. Yeah, I get that, Coach T. But I'm going to ideally just take quality A+ ups on this account. I'm going to be risking $500. I'm going to get that set up actually. Risking minis. Yeah, I'm just risk minis on this account. Risk $500, target 3 RRs, and leave partials after that. Just not really take SMTs probably. I mean, I'll probably take SMTs low-key. Those just play out so nice. I'm going to just take the SMTs still. But yeah, I'm going to risk target 3 RR trades and have a good stop loss either at 5 or 15-minute highs or 5 or 15-minute lows or the liquidity sweeps. And ideally pass this shit. And then if I can start copy trading these 2 accounts up here, right? I could just be risking $200 per trade, target my 3 RR. Obviously, the drawdowns might be different. Maybe they're not when I started out. Maybe this Express account, by the time I pass this account, maybe we'll see. At the end of the day, though, I'm just going to continue to risk $200 on both accounts and just copy trade them, sync them. And if I can do that, I mean, I could just get the accounts up to $3,500, $4,000, and almost pay myself out 5 figures, and then just get it. Another account, so I have 3, and then pay myself out 5 figures, and then get 4, pay myself out 5 figures, and then get 5 and pay myself out up to $15,000 to $25,000 around that range, ideally. And just pay myself out even like $3,000 across 5 accounts. Beautiful. But it's all a process. Like I said, we're not focusing on the money. But I want to just go back to the trading combine and just get some repetition with this and see how I can do. And ideally, just be smart. Market is moving, but this video is only 19 minutes long. Beautiful. I got through that whole video pretty quick. I was going to mark some shit up for going into tomorrow. So ideally, if we get a sub tomorrow, I mean A plus, I'm taking it on this trade without a doubt. We're in an uptrend. I don't know why I like that freaking big ass doji. I don't know what that's from. Get into the groove. I took it out already. Let's go in the 1 hour. You can go to this. That's a low. Sell side. I'm not going to mark out these ones because I'm just assuming one of them will get hit. Ideally before the market opens. We can mark out my 4 hour for value gap that we're coming right back into after rejecting out of. Get into the groove. Playing into that 4 hour for value gap. We got a 4 hour. They got completely filled though, so I mean we'll see. Put these draws back on up here. Buy side liquidity. Basically in the same place. Relatively equal highs around there. Buy side liquidity up there. Let's go to ES. Oh, I still have fucking shit marked up here. But yeah, I'm excited to trade on the another combine again, and just, you know, I'll be risking 1% and then keep the leverage a little higher, like I said, with the minis instead of micros, and then just over time, just ideally, I mean, I want to pass the account, but like I said, if I'm even trading with probability, I know that there's potential I blow it, so I'm just not looking for any outcome into it. I'm just looking to go into that account and execute on my plan. That's beautiful. That's sauce, by the way. Just the way I'm thinking about that. Literally, like, obviously, the goal would be to pass it and be able to copy trade too and not be down money. But also, it's like, dude, anything could happen. If we're really trying to think of probabilities, we gotta look at it as, you know, I could execute flawlessly on my trading plan, but then end up taking 3 or 4 losses, and then the account's blown, and that could happen. There is definitely that's part of the probability. But, you know, maybe it doesn't happen, and I don't know the actual outcome until it fucking happens, so I'm not going to be focused on the profit for the day. I'm just going to go in with my predetermined risk, have a trading plan, and execute flawlessly on it, and, you know, if it hits, it hits, and if it doesn't, it doesn't. And it's just how I'm going to be, that's how I'm going to be looking at even at this Express account. Like, just focusing, I'm down this day, I'm down this day. I don't care when I'm down on it, bro. Like, did I execute on my plan, and did I follow my trading plan, right? Like, did I execute flawlessly on this? And if I did, beautiful. That's all I give a fuck about. That is all I could ever care about. Get into the groove. I'll have to get rid of. I'm going to get these pulled up. NASDAQ. Yes, for tomorrow. Get rid of. Just log in. Tell me it's not flooded with bullshit. Okay, no, I cleaned these up pretty well. Get this off. Get into the groove. Four-hour bearish for value gap. Turn this brightness up. Man, wouldn't that be considered a liquidity sweep? I feel like tomorrow we would want to go buy side. But, you know, maybe I'm wrong at the end of the day. I feel like this would be an order block maybe. I mean, the 4-hour broke structure across all these lows, just crazy fucking ripped down, right? And we already came into it though. So yeah, I don't know. We'll see. Get into the groove. Buy side liquidity. Sell side liquidity. I think I can go to 1 hour too and mark out this low. And we'll come in tomorrow, the next day, and we'll come in the morning and see what exactly is going on. But ideally, I would think market ideally tomorrow coming into the morning, maybe we consolidate. But I'd like to sweep like buy side liquidity and go sell side for these lows here, and potentially the lows resting below here. But we also have pushed down, yes, the day before, and we came back up, pushed down the day before, we came back up, pushed down, came back up, potentially going to see a push down. We're seeing a bunch of consolidation. Maybe we're slowly in an uptrend too, and we're pushing higher from this low. We're slowly going higher, but we're going to find out. I'd like to see us go up to here and then push low and at least go for this low, or potentially even get this. We're both into both sides, or open to both sides of the narrative and where the market could actually go. Let's get ES marked up. Get into the group. Oh, I still have so much dirty bullshit on this chart I gotta get rid of. Oh, it's so late already, 10:47. I'm gonna go to bed at like 11:20. I got some shit I want to write down, but I'm just marking this up. But if anybody is actually still looking at trading, I highly would suggest Mark Douglas. I mean, absolute fucking genius in his way of thinking. And I'm gonna be proof in the pudding. I want to be a good example of why that fucker was a genius, and just follow my plan and show the proof over time. Or bearish for value gap. I mean, that's really what you hear all these traders talk about. Most of these gurus online, and when they give psychology advice, it really is basically just ripping off Mark Douglas. And I promise that. I fucking promise that. And Mark Douglas just explains it so much better. People who are probably new to trading who see me mark on my charts are probably like, what the fuck, dude? Especially like when the charts go on, like near the end of my video where I have all these compliments marked up. They're probably like, what the actual fuck? Probably don't get it, bro. I mean, I remember when I first started, I was like, what the fuck is all this shit? And my shit's color coded. Like, when I go over here, it's pretty easier because it's not color coded. I mean, black candles down, gray candles up, right? I'm thinking about making those green, but then you got this and it's color coded. It's like TGR's chart colors, but then the fair value gaps are color coded, which kind of fucks with me sometimes, but also it's done me pretty well. So I'm not really trying to switch it up. But I feel like I got everything I wanted marked out. 4 hours or 4 hour for value gap we could come into. This one already got filled. Let's go over here. That one already got filled. Alright then. What did I want to do? I wanted to change some settings on. I have it on ticks on here. Alright, beautiful. Oh, here, I'm going to go over the top step and do that. Get into the groove. %6 points. Beautiful. So now when I take a trade, oh yeah, shit. I'm going to go in the combine and I'm going to make some settings for this. Personal daily loss limit, $550. Personal daily profit target, $3,000. Liquidate. Maximum trades per day. We're going to keep that at 1. Maximum trades a week. It's fine. All right, beautiful. So for the combine now, I'm able to risk no more than $550. I'm going to keep it at $500 on minis. Personal daily profit target, because you only can make $3,000 in a day on this. I'm just shoot for $3,000, which is up here. It'll liquidate me once I get that. All I need is, like I said, a 3RR, 4RR, a 3RR, and then leave a partial for 4 to 5, and then counts basically fucking passed. But we're going to see. Charts and data. That's all good. I wonder what it would look like. All right, let's fix this. If I change my symbol. How do I save this by default? Oh, fuck. How do I go back? Thank God. I thought I just fucking... I've been so pissed. I want to change my up candles. I think this is pretty good. Yeah, I like this actually. I actually love this, yo. I'm gonna stick with the green and black. Because then it's like on this with my fair value gaps, you can tell it's 4 hour just off the like the blackness of the pause. But I actually love that because when I'm on the 1 hour too, I still know it's a 4 hour. Um, Probably going to come into this 1 hour, I'm assuming, and either inverse it and go with sell side. I mean, bro, I did not want that to say sell side. Inverse it and go buy side liquidity for that buy side. But it also could come into this fair value gap that we have. So mark up right here. Come into the fair value gap. It could come in there, reject out of it, and then want to push us potentially lower. We can look on the 4 hour and see where we are on equilibrium. So I'll mark. Well, we already came into it and pushed higher, so I'm assuming we're going to push in that fair value. What if I go from... I mean, that's basically doji, and we'll go to the 1 hour. I mean, yeah, we're going to find out. I honestly really don't know. But, yeah, I really low-key... How do I make sure... Make sure I just save this. Absolutely beautiful. So when I go over to NQ, oh, that's so beautiful. I get why ICT traders use these colors. And then how does it look on my long position? When I go to trade I should have taken today. Where to go? Go from this high. Where to go from this SMT it created because he has swept that out, right? Where to go to? Oh my gosh, yeah. I think I got in. Oh, I know where I got in. We'll go for a short position. Just want to see how this looks. Okay, bro. Yeah, I think this makes sense. Let me just see the RR to make sure. I think this is exactly where I got in. It is, isn't it? Yeah, when I say that 17 RR. How does it look on the 5 minute? These candles look pretty good. I feel like this looks pretty clean. Like easy to see while it's in there. The 15 minute. I wonder if I should change this color to... Oh, fuck no. I feel like that's pretty good. I feel like the color I had on it was too dark. What's the difference between this one? I feel like it's pretty dope. Alright, cool. Noted. Alright, I'm gonna end this video. I got almost all this shit marked up. I need to go to bed. But yeah, coming in tomorrow, we're playing into a 4 hour fair value gap again. We filled in deeper into it, and we're in a daily fair value gap. just literally resting inside of this. We have the daily that was resting in between here. Potentially see an inverse on the daily for, okay, it's lagging. We see an inverse on this daily for value gap, which is like right here. We see an inverse on that. I mean, that would be pretty fucking interesting. Because, I mean, we could reject off of this and give, like I said, a daily break structure, break past this low, and then at that point, if that we get that, we're going for these lows. Which it looks nice, it looks clean, but it's a probability. We could just, like I said, inverse this daily. If we inverse this daily, well, you know, we're back at all-time high trading, which I hate. I do not like all-time high trading. Since we've been away from all-time highs, I've been able to take more and more setups. Oh, what a beautiful trade this was over here, 7RR, and the one after. Beautiful. But yeah. I'm going to get off. Close this. I'll keep that up, actually. Tomorrow, going into tomorrow, we have the fuck. Oh, we have Philly Fed manufacturer at 7:30. We have FOMC member Waller speaks at 8 a.m. and then we have nothing else until 9. We'll see with what the market wants to give us. Other than that, yeah, all yellow folder, and then Friday we have nothing. Absolutely nothing. So I'm going to be taking the trades, like I said. I got Nasdaq marked up. We'll get rid of this. We'll just have these marked up. And then, yeah, I got NQ pulled up, and got to remember I'm trading on the combine now. But we'll see. We'll be fine. Peace. I'll get this uploaded. Have a wonderful night.